How's the lights look, boys?
Oh, wow, I got
Lights look nice.
I told you. You want to switch? Your seats?
Yeah, you want to switch with me so you get your good side?
You want to be front.
Get my good side.
Like this. Actually, wait, you gotta what is it, baby?
Big question.
Oh, damn, muscles. You don't need no gym membership. you want to be the personal trainer?
Because I got a really big team.
Where's the bell?
Ooh,
Ready to rock and roll?
yeah, I think we're good, right?
It's about that time.
Same time every week. Same time,
Same place.
same place every week. All right, you guys ready? Let's kick this off.
BCG, LMC.
Let's get it.
DJ Premier.
Evil Empire.
Oh, Radical, I like that filter, Radical.
Damn, son, where'd you get this?
I have to say, guys, we must be making money because the production team is getting better, right? That little transition, that little filter, that was kind of fire, right?
Oh, there it is again.
Yeah,
There it is.
let's go,
like
Radical.
I
All right.
like that.
Ladies and gentlemen, welcome to our 18th installment.
18. Wow, we're
18.
legal.
Episode 18. Episode barely legal. Episode 18 of Tequila Thursdays. Again, sponsored by, powered by, authoritative by. Is that even the word? Brokers Connection. Also, shout out to my guys from Leads to Connect. My name is Daryl Mills, and I am your host, aka El Mágico. To my right, I have the infamous and well-known.
Welcome, everyone. Jose Martinez, Business Development over at Lemon Capital and Fun Rock Capital. To my right, we have...
You've got Sean McClellan, your favorite broker's favorite broker, business lending extraordinaire. Thank you, folks. Pleasure being here.
And to my left, hot off the press, fresh from a closing,
Whoa.
I got my boy.
Man, you know?
You look good. You play good.
All right.
But this is Joe Garan,
Here we go.
There you go.
senior loan officer over here at Fun Rock Capital.
He said senior or senor?
Senor loan officer.
There you go.
So, ladies and gentlemen, welcome to our 18th installment of Tequila Thursdays. Again, we are all here, and honestly, we've been pretty hyped up today. It is the end of the quarter, so for most of you should know, but the financial fiscal year is broken up into 4 quarters, right?
Yeah.
Every 3 months, the quarters change, right? So we're at the end of March, so we're at the end of the quarter.
Time flies when you're having fun.
I think I lost my voice from screaming earlier. Oh, it's
It's been a fun week, honestly.
yeah, it has. But it's been a fun and eventful day. As we well that's
motorcycle.
That's like Godzilla.
that's
Hey, wow.
somebody speeding off in the Charger,
After
right?
someone was hungry.
No, but today's been a really fun. Today's been a really fun and eventful day. Yesterday, Joe closed a nice size mortgage to go ahead and end off the month / the quarter.
Clap that up.
Yeah, clapped it up
Thank you.
for Joe.
Appreciate y'all.
We also, Sean buttoned up an MCA today, got a $55,000 MCA close. Clap it up for Sean.
What's the affiliate's name? It was an affiliate deal, right?
Yeah, that was an affiliate. That's my man, Jay Kumar.
Jay
Nice.
Kumar, shout out to Jay Kumar. Shout out Jay. It was a lot of moving pieces for that deal, but we were able to go ahead and get it done. And I just wanted to honestly give you guys, clap it up for you guys. Definitely got to clap it up for Jose as well. Jose does a lot more stuff behind the scenes and from his office and from his command center, I like to call it, to go ahead and put all this together, make sure that we have the lenders that we need, make sure that we have the guidelines that we need, make sure we have the programs that we need. So we're clapping up for Jose. He doesn't get enough credit. Doesn't give enough credit. But ladies and gentlemen, so this evening we really wanted to kind of dive into cracking the lender code. Okay. We don't want to just talk about deals. We want to dissect them. Tonight, we're really going to pull back the curtain on what really gets deals approved and, quite frankly, spoiler alert, it's not only who you know, it's about how well you package the deal. Okay, Jose, you want to take it over from here?
Yeah, well, listen, one of the topics, and if you are just joining us now, I know that on Tuesday we spoke about the effects. I don't know if most people know this, on the effects on the Fed. The Fed the Fed met this month. And what they did was interest rates, right? Everyone thought that interest rates were going to drop, but they have not, right? Or not as fast as everyone expected them to. So today, I guess a lot of the effects that we're seeing now is a lot of the fundings, a lot of the closings is because everyone was on pause until they saw what happened with the rates, right? And I guess just to dive into, Joe, on in mortgages, has it really affected the market in the negative space?
I wouldn't say that because rates did drop on
Okay.
these investment loans, DSCR loans, mostly. Rates did drop and then slight increase. So maybe we're at mid sixes on some deals for a few weeks, and we're back in the high sixes for clients with around like a 700 score, single family residences. But not too much of a drop off. I mean,
No.
I think property prices have kind of plateaued, maybe even
Yeah.
dropped a little bit in some places. Honestly.
Okay. All right.
So,
Now that's one side, right? That's mortgages. I mean,
Yeah.
in Sean, I know in current events, I mean the SBA, right? SBA came back with like fraud. There was SBA. What is Doge?
Doge, yeah,
Right?
Doge is looking
SBA
into it.
fraud. One of the headlines, was they were allocating funds or giving SBA programs.
$200 billion in fraudulent SBA loans.
Right.
That was uncovered.
Yep.
How-
And
how does-
also the PPP, they're still going after people now that took PPP and EIDL money.
5 years later, for real?
Yeah,
Yeah.
they're
Yo,
coming
they're
after
going
them.
after everybody for
Yeah.
5 years. People thought that they skated away. They were
Yeah.
buying Lambos in Miami.
Yeah.
These guys were
Crazy.
buying a crazy amount of
Shopping
stuff.
sprees at the Gucci store. And,
Yeah.
That's wild.
What did you do with your PPP money?
I didn't get no PPP money.
No, but how is that? Is it affecting your SBA programs? Because I know that we deal obviously with a lot of SBA programs, but on your side, how is that affecting the approvals, the how quickly they can get approved, or the process?
Not really. I mean, the rates have been pretty much around the same. They're pretty competitive. I mean, I think didn't the Fed rate drop a little bit, like in the last 4 months or so.
I believe so. It's yeah, right.
Yeah, not a whole lot, but just
A smidge.
a smidge.
Smidge.
Right. Yeah.
Not a schmidt, a smidge. All right. So, ladies and gentlemen, really quick, this evening, we don't want it to be like too serious, but we did just want to, at the end of every month, just like the car industry, okay, underwriters do whatever they can to get as much money out as possible. Now, in the business lending space, at least in the unsecured business lending space, the same thing applies, but it's even crazier at the end of the quarter, right? People have quarterly goals. They have monthly goals. They have quarterly goals.
Right.
So right now, we've been seeing on the unsecured side, we've been seeing approvals almost 1.5x what people would traditionally get approved for. All right. A lot of the deals that we submitted last week, we've seen altered approvals today go up to, let's just say a deal was
more aggressive. Yeah.
Let's say a deal was approved for 15K last week. This week, 25K. Hey, what is this going to take to go ahead and get the deal done? So it's been a lot of pivoting. It's fun showing up to work, especially in these days, because it's all about finagling. It's all about how you can get this deal to this lender who's going to give the higher approval. It's all about getting this doc to get an increased approval longer term. Placing. I like to say finagling because it's moving and shaking, right? You got to get really aggressive. You got to call your contacts. You got to really dress the deal up properly and almost like sell it to the investor to make him feel comfortable enough to get the deal done. Yeah. This is the time to submit. This is the time to get the better approvals. If you need an extra month or a higher dollar amount on the deal, this is the time. So really, you should get really aggressive with your clients. Yeah. Again, at the end of the day, on Monday is the last day of the quarter. Yeah. Okay, so you should start now. Try to get all documents in now.
Those people dragging their feet, now's the time to tell them.
Yes,
get over. You're gonna get the best rate right now.
Yes, you have to reach out to that client that you had at the beginning of the month that you lost contact. Reach out to that client that said that they did not need the money. Reach out to your affiliate. Reach out to your ISO source that said, I don't need the money. Because I guarantee you, the approval that they're going to get now is definitely going to be different than they got at the beginning of the month.
Yep, and better than next week, too.
Yes. But listen, before I continue, being that Joe got this mortgage done yesterday. We did a whole interview with him. You guys are going to see some of the content online shortly after we go ahead and chop it up and make it look beautiful. But Joe, really quick, just want you to kind of go into the details of the deal.
Was it an easy deal?
Was it an easy deal? I know at the finish line there was like some problems the night before that you had to move and shake. Why don't you just tell a little bit about what happened in the final almost hours of getting your deal done?
So on paper, it was an easy deal. It was a DSCR purchase. My client had more than enough funds for the down payment, closing costs, good credit score. He owns a bunch of properties. Issue was on the seller side. So the owner of the property passed away, and I believe it was his brother that was selling the property. So, they had issues with probate. Just a lot of issues. The seller's attorney, for some reason, doesn't live in New York. So this guy chose an attorney that doesn't live in New York. Every time we're ready to schedule closing, he would fly out of state. So basically, we were scheduled to close sometime this week. Monday, he lets us know he's heading on a flight to Las Vegas Wednesday at 6 p.m. And we didn't have a CD yet. So yeah, it was a mad dash. We had to do what it took. We had issues verifying. So a lot of banks now, they have clients verifying their deposits or verifying their bank statements through a portal online. So the portal for this bank that we went with didn't work. So I told my client, hey, go to the bank. He printed out transaction history for the last 3 months, a month to date, and he had it stamped by the bank manager. So we had to, improvise a little bit, but we got it done last second, pretty much. We got it done.
It came back to the wire, I think, right? At
Yeah.
Literally.
Yeah.
We got all the docs in, I would say 10 a.m., 10:30 Eastern time here. The closing was at noon.
12.
Jeez.
Buzzer beater right there.
Last minute Nancy, huh?
Yeah.
It's a good client. I'm working on a few other deals with him that should close in the next few weeks. So he trusted me all the way. I told him, like, listen, this is what, these are the numbers. I was very close. Like, the CD came out 2 hours before. So he put his faith in us. He's like, all right, he trusted the numbers I was telling him, and I was spot on.
Now, really quick, for everybody out there that doesn't know, like myself, what does a CD mean?
It's a closing disclosure. So,
Gotcha.
a lot of people, they'll give you numbers. They'll tell you this is how much you need at closing. These are the closing costs. But until title and the lender, it's called balancing. They go through all the figures. They go through all the numbers, escrow, your taxes, your insurance.
All the fees.
All fees, fees that you shopped for, fees that are just included in the loan. A lot goes into it. So, we're pretty spot on our estimate. We have a lot of experience. So, everything worked out well. There's no surprises for the client. All the numbers that he saw at the closing table is exactly what I told him. So,
Joe, so that all sounds great.
Yeah.
But the main
I'm using it.
question,
I know.
main thing everyone wants to know is
Show
how
me
much
the
money
money.
did you make on that deal?
So, it's a good client. I didn't hit him over the head. It's 2.75 points,
Which is a
376.
total of
10,500 was the commission.
Nice.
It's a pretty good week. I can't complain.
Nice, Joe. I'm really, really, really happy for you yesterday. I mean, listen, you got interviews done.
Yeah.
We toasted up to you. You definitely worked hard on that deal. And just
Get
listen.
another toast,
Yeah, no toast. And listen, just
toast to my team too. I can't do it alone.
Fun rock. And listen, Joe, reality is this. When you get so close to closing and sometimes you have to pivot or get something extra at the end, you didn't sweat. I know you're speaking with one of the lawyers. He wasn't worried. So you weren't worried. You're like, you know what? Listen, we'll get everything done in the morning, but literally an hour and a half before closing, it's kind of crazy. On our side, we're not used to that. You know what I mean? An hour and a half before getting something done, but man, you got it done, and I got to give you your flowers, bro.
Yeah, 100%.
Sick. That was
Hold on.
sick.
Now let's take the spotlight away from Joe, and we're gonna put it right on Sean.
Oh boy,
Yeah.
love to put it on Sean.
Whoa.
So tell us a little bit about your deal today. That you obviously, when did you receive the submission? How long did it take for you to receive an approval? How long was it to fund? And just how was the process?
Yeah, I mean, technically, I got the file in on Monday because we did get the 3 months bank statements, but we needed the month to date.
Okay.
We got the approval Tuesday.
Okay.
And it was a very aggressive approval. It was with an A-paper lender. He actually got declined by every other A-paper lender out there. And then out of nowhere, we got a really nice term. It was the best term you ever saw. You know what I'm saying? But there were some obstacles, of course. He's had a few MCAs in the past that I've actually helped him with. So long story short, he had to show zero balance letters. So he had to do some digging to basically show, again, this is an 8-paper lender. He's getting what was it, 16 months, Daryl?
Yeah, and just to add on to that, so I control the submissions on the revenue-based financing side. I'm a guru at what I do, and I know how to place deals properly. This particular gentleman, we have relationships with everybody, a bunch of different lenders, over 40 different lenders that we have relationships with. This particular guy, I noticed from one of my contacts, he's been shopping since the beginning of the month. Now, when we say shopping, that means he's looking around trying to get capital. Well, it came back to me that he was getting denied at a lot of these places. However, I have access in my back pocket. I have my secret lender, right? And my secret lender goes out 36 months on an MCA revenue base. Again, they go out 36 months on an MCA. No, but I know that a lot of people don't have access to that particular lender. So what did I do? I submitted it to that lender, and that lender gets grant exclusivity to the first person that submits the file. So when we submitted it, and I realized that we didn't have any competition on the deal, that was amazing.
Right.
Got the deal approved. It was actually approved for $58,500 over 16 months. However, Sean's guy needed a particular payment. Now, keep in mind, he's been declined by the majority of the 8-paper clean deals out there.
Yeah.
So that means that he was approved by a B-paper lender that probably gave him a 10-month term, or they gave him, maybe even a daily payment.
Yep.
Right? As Sean Cole. Sean Cole, what's up, my brother? Shout out to Sean. Always a pleasure seeing you and seeing you comment, Sean.
And let's not forget, this gentleman was not a U.S. citizen either.
Yeah.
Oh, wow.
Yeah, he had a working visa, and he owned a smoke shop. Now, typically, smoke shops are a little bit of a riskier industry, and the reason why is because they assume that in some states these guys are selling marijuana out of it, right?
Yep.
Whether legally or illegally, so it's a little tough to get them approved. However, my relationships, I was able to get the guy approved for a 16-month deal. He jumped all over the deal. He was like, all right, like almost like, where do I sign? Right? Now, usually when people get excited like that, you assume that why is he so excited? Why is he trying to jump on the deal? Did he get denied? But I already knew the story. All right. But we were able to get the deal done. It's $55,000 funded. It was 8 points on the deal, 16 months.
Yeah.
We button that up today for Sean, and we let I let his guy know, hey, listen, if you need any more money, because usually when people take one position, and I see my guy Jake Hansen, my ISO Jake Hansen's in there. Shout out to Jake Hansen. Just like I told Jake before, when you fund these guys, they're gonna get called the very next day,
Everybody.
2 days later, by other people trying to shove more money in their account, second and third position. We always want to keep control of the deal. So I let this guy know, hey, listen, everybody else declined you for the long-term deal. Come back to me. I'll get you the best rate, the best terms on a second position deal. Now, whenever you fund somebody with revenue-based financing, that's everybody that's in the chat. That's Debbie, that's Corinthian, that's Chris Pendergrass. That's all you guys. When you, ladies and gentlemen, fund a revenue-based financing deal, people are going to be reaching out to your clients at the same time as you the very next day.
Nothing you can do about it.
Nothing you can do about it. You have to make sure we stay on top of these clients. Because if not, they can get scammed by other people. They can have people just trying to do not things that are not right by their business.
Yes.
You know what I mean? So if you want to control the client, make sure you stay in their face.
Yeah, we don't want them taking some ridiculous deal, then they're struggling making payments on the deal we funded.
Correct.
And yeah, especially within the first 30 days.
Real quick, shout out Isaac and Shaq Simmons. I see y'all.
There you go.
Yeah, there we go. All right, Jose, take it over.
Now, this segment today is about cracking the lender code, right? Cracking the code. And what I mean by that is understanding the different programs, right? We spoke about mortgages, if you have properties. We spoke about merchant cash advances, revenue-based financing. Today, we have a special guest, right? And in our special guest, actually, Raymond.
Suck up fit, monsieur.
There you go. He actually he's pulling up a chair now. He's been with us for quite some time. He had his own company as well.
He's in the kitchen, bro. Give him a chance. I think he has a chicken wing or something.
What are you munching on over
Give him
there?
a second. I didn't even know we had any food left.
Today's segment, we really wanted to just show you different type of deals, right? If the client qualifies for a deal, they're going to get it, right? If their personal credit score is a 680 plus, obviously that's golden. We have a program for that. If it's under 600, we have a program for that. If it's in the middle, be careful. I feel like these guys are getting nervous. If it's in the
Tequila
middle,
Thursdays.
if it's below 680, then we have a program for that, right? And I guess, ladies and gentlemen, I mean, you got to
Scooch down.
You got to move closer.
Scooch down.
Slide to the left.
Yeah,
Jose, you don't got to sit on my lap, Jose. Damn,
You're looking at that camera right there.
Right
to the
there.
left.
Raymond, yeah, that's your camera right there, Raymond.
Right there. Blow.
Ladies and gentlemen, shout out to Raymond. Shout out to Raymond.
Introduce yourself, Raymond.
Yeah, Raymond, who are you? What do you do?
So, my name is Gaetan Raymond de Bousquet.
Well, hold on, time out. That's your real name?
That's my real name.
I call you Say Less.
No, I know. Say less. We get it done.
That's it, baby.
Um,
Clap it up for Raymond. Yep.
but, I am 0%. I mean, I'm business funding specialist. And I started in the industry about 5 years ago, and been able to fund a few $1 million and 0%.
Clap it up for that.
Thank you.
Nice
It's been a journey, but it's been fulfilling, and you know, when it comes to the 0% game, everything is based on. If we're talking 0%, it's no doc, right? So
Right.
if you guys know about no doc, that means that no bank statements, no tax returns are required, but you do need a good personal credit score.
Nice.
So that's super important. And typically, you're looking at a 700 plus score. That's gonna get your client, and we're talking clients here, right?
Yes.
Everybody in here. So for your client, you
Brokers,
want them to
clients.
be at a 700 plus score, and we focus in on something called primary trade lines, meaning these are credit cards that you own. So if a client owns 2 credit cards with at least a 2,500 limit or more, and has 2 years of age, with a 700 plus score, no derogatory, no late payments in the last 2 years, no charge offs, no collections, then they're eligible for up to 150K.
Now, Raymond, to just interject really quick because I'm so glad that you're on tonight because people have a lot of questions about the no doc program, right? Because they think 680 credit score were good. You know what I mean? But you just said 700. I'm glad you said that because, ladies and gentlemen, remember 680 is bottom. It's like bottom tier. You're just
For this program.
yeah, you're
For
just
that
getting
program.
invited to the dance with regards to the no doc program. But really, Raymond, like you said, 700 is ideally where you want people to be entry level into this program, correct?
Yes, correct. A 680 can get you there. And it's, our focus is underwriting a file correctly because you have times where a client may come in 687 credit score, but they may have a 15K primary credit card they own for, a few years. And then from there, something that may be plaguing their score may have been a late payment that happened a year and a half ago.
Yeah.
And then sometimes that can affect the score. Doesn't mean it affects how the bank looks at them. They may say, listen, we can still do something for this client based on how well their credit profiles set up. Now, you can have a client who has a 750 not get approved, right? Based on their primary. And that's why it's important. It's not about the credit score. It's about the overall credit profile.
Yeah.
So we've seen, 690 people with 690s get 90K, and then we've seen somebody with an 800 not get approved. And it's not to say that 800 people with 800 scores, of course, are more than likely going to be approved, and that never ever really happens. It's just, when pushing over hundreds and hundreds of files, you get to see so many different variations of what a file can look like.
Yeah.
So the key component is the overall profile.
Yeah.
If that overall profile is set up correctly, the sky's the limit.
How do authorized users play a role in that? Does it help? Does it not help? Because I get a lot of clients saying, "Hey, how about an authorized user? I can add authorized users." Does that help nowadays or no?
Nowadays it does to a certain extent. A AU would typically be put on a credit profile if, let's say, a client is lacking. Let's say a client has a primary, let's say a $3,000 primary, but they only have one primary. There's times where we may squeeze an authorized user trade line to not only boost their age, but also to add another component of a limit. Even though that may not, there's times within the systems, right? Some files are underwritten by underwritten by the lenders, and then some files are just submitted straight through their system, and it's an algorithm based. So you may just get an automatic 50 or 100K approval based on the algorithm. But if you get an underwriter who really looks into it, then
We're putting him on the spot.
Yeah.
get an underwriter who made
Yep.
look.
Don't be nervous.
Nah. We talking game. We talking real talk.
Yeah, let's go.
So you get an underwriter who really looks into it. It could affect you, and it could snap that limit that your client thought they were getting into shambles.
I had a question real quick. The utilization. So what's
Oh, Joe's all up in the mic. Damn, Joe. All right, yeah. No, go ahead. That was good. Yes.
Let's talk.
Radio, yeah.
Because you mentioned, 680 you just invited to the dance, 700 and up, we're good. So the utilization, because sometimes you say 20. I've seen like 23 get by depending on the person. So what type of utilization you look for?
That's a good question, bro. Utilization does play a role, and that is based on the overall profile. And you guys, I mean, everybody who's watching this, but all you guys, when you guys send the information over, they see the requirements, right? They see what it looks like.
Yeah.
Now, this is why I'm saying, like, we underwrite the file based on what we know can be a potential bagger, meaning they're gonna more than likely get approved. Now, when it comes to 20%, that's typically where we want to be at. But if a client has a 777 credit score with 32% utilization, you can squeeze that because they have some type of
mitigating factor.
Exactly.
He used a new term today. I'm gonna start
that was
using
beautiful.
that.
I like that.
Wait,
I
he
like
just
that.
said he was a
Mitigating
bagger. It
factor.
made me think. A
A
bagger.
bagger,
Oh, because
bagger.
they're getting the bag.
They get in the bag.
Bag.
Yes.
Got it.
Wow.
So we found a bagger. I like
Throwing that in there.
I like that. All right.
So
No, also use mitigating because mitigating factors, right, Raymond. Like, what if they've paid off a car in the past? What if they paid off a mortgage in the past? Something like that, kind of, I guess, overcome
Boost
the
the-
utilization part. It's if it's low enough.
kind of like boost the profile.
yeah, I mean, I would say we don't. So
Yeah, we don't
utilization
know.
wise, we don't want it to be over 35%. Right, and that's with just any file in general. Like, we don't want it higher than that. But our whole focus is if we can get it to under 35% based on where their profile is at.
Yeah.
Meaning, like you said, those mitigating factors, then we can leverage it in a certain way to make sure we get the approval. So
Now
I
we
mean,
talking. Now we
it's
talking.
really, it's contingent upon the score. And like I said, listen, when you bring your file over, we're gonna underwrite. Listen, everybody wants to get paid, right? So
We're not working for free,
we're
right?
not working for it. So we're gonna underwrite that file until we can't underwrite that file no more. All right. So when it comes to getting that approval for you, if that file can get in, it's getting in.
We're gonna get it in, yeah.
And if it can't, then we just we're gonna tell you what your file needs to do, and the file come back stronger, and we make it happen.
Yes.
Yeah.
Now, what's the dollar amounts that you normally get on a no income doc, whether it's 0% funding? What's the max dollar amount? Because you've pulled out big numbers, big numbers as far as getting it for clients.
Yeah, for sure.
What was the highest dollar amount you've received for a client?
The high and 0%.
Yeah.
And 0%.
Don't be modest either, bro. Tell us what it.
Yeah,
Tell us.
Nah. I gotta tell you the truth.
Tell the
It's-
truth,
We
whole
only
truth.
need to tell. We only
Nothing
tell the
but the
truth
truth.
is, I'm thinking around like 230, 240.
Okay.
Okay,
You know
wow.
what I'm saying?
Now that's obviously
That's
with like a clean file, lots of trade lines, good payment history. Like
Yeah. And
that's
then-
like the perfect client.
and that's stacking too, right? Like we do something called the wealth stacking method. Like you send the client to one bank. Let's say they give them 75. Another bank may give them 20. Another bank may give them 30. It's all contingent upon how many banks the client's willing to go to as well, right? And then of course that overall profile being slamming. But I mean, like if it comes to lines of credit, like and because you can do no doc lines of credit as well, and then you could do 0% depending on the lender as well. So you could mix it up with the same bank, do no doc 0%.
Right.
And Raymond, you only get one shot, one opportunity. Like I mean, wow.
Do
No,
not
but
miss your chance to blow.
yeah, no, but listen, Raymond. You only get one shot with most lenders, and you don't want to blow it up with a sloppy file, right? You want to dress up the file properly, and it's all about strategic submitting, right?
Yeah.
There's a certain layout and a certain formula that you want to use based off certain profiles in which, you go to bank one this time, bank two this time, depending on the approval or denial. So it's about strategically submitting it, correct?
Yeah, for sure. We do have a sequence, a special Krabby Patty formula, funding formula. But
Yeah.
it's you do have a specific way of doing it, and we do have an approach because we want to get the best bang for the buck, right? For your
Correct.
client. Our whole main focus is being able to deliver at a high level, because once again, we ain't doing this for free. So
Correct.
I'm saying? So, but yeah, we do have a way of how we leverage our banking sequencing, because one lender may take a little longer than the next.
Yes.
And you kind of want to put it together so you can. The focus is to be in and out within a week and a half, 2 weeks, everything coming back with approvals. So, yeah, we do have that.
Okay.
That's still how we do it.
Nice.
Nice.
Oh, well, I have one other question for our special guest, because he's so special. Now,
So special.
also special. Now, Raymond. Now, one of the things that you said is, certain trade lines have to be aged for 2 years to look good. What about the actual company or the LLC or the corp's time in business? How does that affect the approvals?
That was a great question. So
I try.
yeah, it was a really good one. It does affect you typically want LLCs that are a year and under can potentially have, not in terms of approvals, but some lenders may not want to deal with those with those with those businesses. So I mean, you having a brand new LLC or a client having a brand new LLC,
We can still get them funded, right?
oh yeah, for sure.
It's
So
a
it
dollar
doesn't
amount.
it doesn't matter. It doesn't matter if it's a day old or anything like that. You could get it right away. I'm just, in terms of you getting more approvals, it's better for you to have at least 1 year of age.
Gotcha.
But
But let's just say I start up, and ladies and gentlemen, I want you guys to key in on this, because we actually have the 0% specialist here. So if you, ladies and gentlemen, have any questions in the chat, please don't let the glasses intimidate you. Raymond's here to answer any of your questions. But Raymond, while we do have you, so let's just, because a lot of people looking for startup funding, right? A lot of these LLCs, a lot of these corps, people looking for startup funding, right?
Yeah.
So if I just start up an LLC, 30 days old, what's like the max that you think I can get on like the no doc side, or what you've seen in the past?
I mean, I've seen 130 to 150. I've seen that. So you can get. The thing is, we are when it comes to business funding, there's two ways that we can offer in terms of 0%.
Yeah.
There's a longer time frame that you can offer in terms of like a 45 to 60 business day window.
Yeah.
Or there's where you can offer a 2-week window, and that 2-week window typically takes that time frame for a client to get up to 150. But if we're going past that, which we typically don't do, it depends. Then of course more capital can be added on, but it requires more work in terms of the client building out relationships with different lenders that we have. So when it comes down to it now, getting clients approved for with a business under 30 days, we can get them up 100K plus.
Got it. All right. Well, quick question. I just want to ask, because I know obviously we're putting you on the spot. There's a lot of information that you.
We just made you the main focus.
Yeah.
Like question.
Do you
love.
In the community, do you guys have any questions? Please ask. Unmute yourselves. Put it in the chat. Let us know. I mean,
Hey, listen, especially my guy. Listen,
Sean.
my guys, my ladies and gentlemen, ladies, guys, listen. Ask him the questions. I can submit for 0% all I want. I can answer correct questions all you guys need. This is the guy. Don't ask the questions tomorrow, because I'm gonna say, why did you guys ask Raymond? Why ask me? Raymond's right here. I know he looks studious. Don't be afraid to ask him.
Sean, you got a question? Sean, you unmuted yourself. Sean's not cooking today.
Yeah, and his background's blurred. Sean, what you got going on back there today, huh?
Yeah, what's going on?
You got Sean. Oh, here we go. Look, he's in Shaq. That's your. That's your answer, right?
Shaq, how y'all doing?
Isaac. Isaac. Okay.
So, business credit is just better. So, like, let's say
you're making transactions with your business. You don't want to put it on your personal credit.
The question. You got the professional here. They want to hear from the professional.
I mean,
what's the question? What is the question?
I'm the mortgage guy, but they're asking is business credit preferred over personal?
Now, the Simmonses, I can say that Simmonses, the Simmonses is for which program are you guys talking about? Because we have a bunch of different programs here, so it all depends on. Yeah, lots of variables.
Don't be scared. Get on the camera. Don't be shook. Get on the camera. We can have a conversation.
Sean, Colby, I have to say, you not cooking anything is like freaking me out, dude. Like I feel like something's going on. Like I don't even know how to approach you. Like you're not cooking, you're out of your element.
Maybe he's fasting. Who knows?
True, Ramadan, yeah.
All right, so let's assume it's for business credit cards, right? Is business credit preferred overall personal credit?
Well, I know Isa and Shaq, they have a business. That's why, I mean, this is my people. So they have their business. I would say personally, I mean, why would you want to use your personal credit and potentially lower your score with inquiries and have a lot of debt on the personal side when you could put the debt on your business, on the LLC or the corporation, and you can get higher approvals. The more you get approved, and you pay off that loan, the more you get approved in the future. So you get approved for $100K today, you could get approved for $200K next year.
So Raymond, I think what the real question is does a business's Dun and Bradstreet score affect whether they can get business credit cards or not?
Yeah.
Yeah.
It's not really important. All the way pretty much. You have certain lenders when it comes to lines of credit, but if we're talking 0%, no. If we're talking just 0%, no, it's your personal credit score. Like that's the key to 0%.
To the no doc, right?
Yeah, that's the key to no doc. You're PGing it, but it doesn't report on your personal side. And as Joe was saying, it just makes way more sense to put the business to get business credit over personal and
now
leverage it better.
Now I do want to let you ladies and gentlemen know the no doc program, if you are no doc, there's 3 different types of funding strategies that comes with that. You can either get a no doc business line of credit, you can get a no doc a business term loan, or you can get business credit cards. Now, traditionally, almost 90% of the time, the bank is going to get you business credit cards. Mm-hmm. But you should almost want business credit cards. And the reason why is because the no-doc term loans and the no-doc lines of credit, the approvals are small. It's $25,000 or below for no-doc business loans or, business term loans or the no-doc lines of credit. However, I mean, listen, if I'm able to get you credit cards up to $150,000, up to $250,000, I mean, I'm very sure you would rather that over $25,000.
Don't we get the business lines of credit for $50K? No, don't we do that?
Yeah, but that's not no doc. That's full doc.
No, wait.
There's a no doc program.
Oh,
right?
You know what? I think this
is a no doc.
This is when you actually
see. That's why you learn something new every day. That's why you ask the questions, right?
You showed up late to work today. So there is. So now what we actually. Daryl did show up to work late. But
did I show up to work late, or did I set up the question properly to get engagement?
That was an alley-oop.
So now we actually do have a no income documentation business line of credit. Okay, credit score is 720. 720 credit score. You do have to be 2 years. The client does have to be 2 years in business.
Ladies and gentlemen, write this down. Write this down.
Who do they pull from? Like what bank?
All 3.
What bureau?
Yeah, we have banks that can pull from Experian, they can pull from TransUnion, they can pull from Equifax. Now that's important because the reason why Raymond is asking that is because every bureau weighs or looks at your credit differently. That's why you have different credit scores.
Yep.
Right. So when someone wants to go ahead and apply for our no income documentation business line of credit or business term loan, what we request, real simple, 720 score. But we need you to go ahead and show a little bit of commitment. We need you to send us a tri-merge report. Okay. What does that mean? It means that you go to Experian.com, or the client goes to Experian.com, and they download a tri-merge report.
Now, when you say tri-merge, what do you mean?
Experian, Equifax, and TransUnion. Now, we don't want to hear about, hey, listen, it costs money. If you're going to spend $20 to get $150,000.
Do it.
It's a
Do it.
no-brainer.
Yeah.
Do it.
Right? Sometimes Sean's right. It's free
7 days.
sometimes.
7
And
days.
some for some people it's free. If you're already paying for, I believe, the credit lock, it's free. Right? But go into Experian.com, and pull the report. We need that. We need your tri-merge report, EIN letter, articles of incorporation, driver's license, right? And you need to be 2 years in business.
Really quick, Sean Combs said hunger strike, Triforce, Tri-Merge, Trifecta. That's my guy, Sean Combs. Christopher, good evening. I see that you said hello to us a little bit before. You said good evening, everyone. Hello, Christopher. Christopher says, any other differences between the new no-doc term loan versus the no-doc business loan / credit cards? Jose, do you want to tackle that since you know about all three?
Yes. So you cannot get a no-doc business line of credit if you're new. You have to be 2 years in business. No ifs, ands, or buts about it.
That's filed, right?
That's filed. Yeah. So they're looking at how are they going to verify that?
Your articles.
They're looking at the articles, but forget about that. Let's say
Yeah.
that you altered the articles. We do know what altered articles look like. They
Mhm.
check the Secretary of State, SOS. Type SOS on Google, put the initials of your state,
Yep.
and you can look it up. I can look up any business that's registered with the Secretary of State. They're going to look at the inception date. The inception date is when the business was started, right? So that's where they're going to go based off of. It has to be 2 years or greater from that date. Okay, so that's when it comes to no doc. On no doc lines of credit, you need to have 2 years in business. On the business credit cards, as Raymond had mentioned, is that I believe Raymond, what did you say? You said minimum 1 year or 6 months or a week, or what did you say?
For the
No doc credit cards, yes, sir.
no doc credit cards, nah, one day.
One
you're-
day.
Yeah, you could.
The longer the better.
The longer, the longer,
Yes, sir. Yes, sir.
the longer the better. But in terms of like a client wanting to get funding right away, and they have a brand new LLC, you can do it. That's just super important to know.
Yes.
So, ladies and gentlemen, it's safe to say that your clients that need startup funding, I mean, listen, the SBA can get it done, but it's the SBA really. It's like a 5 to 10% approval rate for startups,
I was like,
right? You have to approve a concept. You have a. It's just me
It
personally.
takes time too.
Wait,
Yeah.
a question though. How long does that take?
It takes time. the
But
SBA
listen,
loans.
I've been doing SBA loans for like 10 years.
I'm saying a startup though. If I got a client right
No.
now, he got a 770 score.
I need you to listen to me.
200K a year.
I need you to listen to me.
Yeah.
I have never seen me personally and SBA do a startup loan successfully. Me personally, I'm not saying it doesn't exist.
Wait. I did one.
I'm never saying I'm not saying it doesn't exist. You 1 out of 90, but I'm going to tell you something, right? There's other programs, guys.
Yes.
The SBA it's a lot to get an SBA done. We will do them. They will get done.
Yes.
But for startups, this program that Raymond is telling you guys about, the 0%, is one of the best programs for them, and we can get it done in under a month. Okay? You don't have to show a business plan. You don't have to show any income docs. We can get it done with a strong credit profile. So, ladies and gentlemen, anybody out there that's asking for startup capital, let's see if they have the credit profile to get it done. And if they don't, they can always get a cosigner.
Well, think about it like this: if you're looking for $150,000, right? If all you need is 50,000 or 60,000, why would you want to do that? You can go ahead and apply based on your personal credit.
That's it.
0% interest for the first 12 months. Everyone's going to say, "Hey, it's a credit card," and they're going to look at it as something negative. Not at all. Credit card is going to allow you to inventory. Everyone, I'm assuming, has to buy inventory or equipment if you're opening up an office, marketing, etc.
Yeah, that's big.
So it's money that's going to allow you to take the next step, figure out a way how to go ahead and use it. If you cannot figure out a way of how to use it, give us a call. We can go ahead and guide you and prepare. Or, you know what, just go live on join our calls on Tuesdays and Wednesdays. Debbie's there. Debbie was an affiliate that joined us.
Hi, Debbie.
Debbie, she's new to the community. She's been with us for a month, and we were able to talk about different ways to market. I think that she had mentioned in the community that she was able to implement what we spoke about, which is huge.
And I just want to say this, ladies and gentlemen. We're all, I'm a firm believer in time kills all deals, right? So if you have a client
Definitely.
that's ready to go right now, super aggressive to get stuff done. SBA is not the route for them. If they need it right now, there's other programs. We have to be able to pivot. Listen, people say SBA because that's all they know. SBA, Small Business Administration, backed by the government. All that sounds great. Those are the people that give the highest denial rates, right? Why don't we do something that's smart, efficient, and we can get you 150,000?
Christopher.
Yeah, I'm gonna read that in a couple of weeks. Think about it, ladies and gentlemen. The government really doesn't want to give out money like that. They've been burnt. They were burnt by the PPP loans. They were burnt in 2020, right? You have to find different ways to pivot. The No Doc program, not providing any income documents, but going off your personal profile, is amazing. You know what I mean? And that's strategically something that, that Raymond, other people have went ahead and took the time to study and to learn exactly what it takes to get you guys approved for it. So again, that should be the route for startup.
Also, one more thing I want to add is that the SBA programs that we speak about are not the SBA programs where you go directly to the SBA administration. Completely different.
Yeah.
We have relationships with actual banks that what they do is that they've already been approved by the SBA. All the SBA has to do is pull what is called an E-Trans score. That's it. And they have once they pull the E-Trans score, make sure your credit is there. They allow the bank to go ahead and fund you, and they just insure it. You're not going to the SBA and you're waiting all this time. So, Christopher had a question. Do you think it's possible to close an SBA loan for an existing company in 60 days? It depends what type of deal.
Yes.
Right. It depends what type of a deal. Like
what type of SBA.
Right.
Yeah.
What type of SBA program that they want to go for? Yes.
It depends.
Dollar amount is a big factor.
Yep. If it's if you're starting a new business, it's going to take a while. And the reason why I say it's going to take a while because now you have yourself and another party that you need to obtain financials and documentation from, right? You need to get approved. You have to get approved, but also the other party has to get approved. The other party is the business that you're purchasing. You have to provide financials. You have to have personal experience doing it, resumes, etc. So
it's got to be a business audit as well. The SBA sends out somebody to audit the business as well. So they want to make sure they got all their ducks in a row. They want to make sure that it's fits their risk tier.
And that's why Daryl says if you can find an alternative to it, then do it. I mean, listen, it depends how quickly you're looking to get the funds, how quickly you want to move up on the deal. Remember, at the end of the day, it's nothing negative towards it. It's the government, and they move at a slow pace.
I saw Christopher had another question because he was talking about the difference between No Doc and
No, he answered that.
No, scroll up. He said the difference between. So another thing I wanted to add, because I have a lot of real estate investors. They want to get the No Doc, but the No Doc is business credit cards. So unless you're swiping that card for supplies, for building supplies, for your renovation, a lot of people say, "Hey, I want cash. I want cash from the card." You would have to liquidate the card, and that's a whole nother process.
But it's possible. I mean, I just actually I did a call with about 60 real estate investors.
Nice.
A few days ago.
Was that my lead? Go ahead, bro. Go ahead.
It was a great call, and a lot of those investors were focusing on the 0% interest funding.
Yeah.
So that they can do the DSCR program.
Yeah.
And we just funded a few deals, and they are going to be able to liquidate. But there's ways, right? You got to have somebody, or we have.
Don't give away the secret. You can't give away the secret.
Not the source.
They have to join the community.
I was going to say for the
Once
line
they
of
join
credit,
the community, you give it all away.
Can't give it.
For the line of credit, technically they wouldn't have to liquidate. You have to have a higher score. You need to be.
But it's tougher to get because you have people who want to be real estate investors. You may have a nurse who has a 790 score making $150K a year, and she just decides that
she wants to start fixing and flipping
100%. And you could get her that. Let's say you get 120K, and she's investing in Philly. Right now, houses in Philly are very cheap, and to get a DSCR or to get a loan on it is not too much of a down payment. And then you use the rest of the capital or the credit to renovate. And then you do the refi method, right? So, but I think when it comes down to that, it is possible for people to liquidate, but like you said, you got to join. You got to join.
Yeah, you got to join the community, guys.
You
understand. You ain't giving out the secret sauce.
And there's nothing wrong with telling your client, okay, we will try for the SBA, but you can tell your client, in the meantime, we will try the SBA, but why not get you the No Doc, number one is a safety net, but it's also going to be a lot faster process.
Much
So
quicker.
you can still apply them to the SBA. You know what I'm saying? It may not have as high of a probability of closing, might take some longer time, but you can
Guys,
still offer them cash in between
you
with
know,
the no doc programs.
I had to bring it back to the mortgages though. I'm here with 4, business funding guys, so I got to.
No, I know we got you.
Once
We got you. So you fresh over closing? We got you. We got you.
One more thing before we move over to the mortgages, right? It's you have to understand what the purpose of the capital is.
Yes.
One of the biggest things, and we go back and forth on the floor. You guys in the community, you guys can see the take, so you guys can see actually what happens on the day to day. You have to allow our guys to speak to the client. Now, I know you guys are professional in your field. I completely understand that. But there's certain different ways. There's a lot of things a lot of information we just gave you guys today that we can pivot when it comes to a deal. So just start trusting the people that you actually go ahead and give the deals to, your account executives, so that they can work the deal and allow them to go ahead and present different strategies to the client. Right? So let them work.
And just to pivot off that, I definitely have to say, Sean's deal that we got done today, we're dealing with an ISO, and hopefully Sean, that your ISO is in here. We're dealing with a lot of times when you guys first refer a couple of deals over, the deals that you guys are referring over are your personal clients that you've been funding for years. You guys have a great relationship with. You guys don't know all of our programs. So we would like to jump on the call. We want to jump on the call with you guys on 3-ways. You guys can hear what we do. But we need to speak to the client, because again, the client's going to say certain things that we're going to know. Oh, we can pivot to this. Oh, we can pivot to that. Instead, you guys are not going to be able to relay the message the way that we do. You guys will eventually do that after some time with us. Let us get on the phone. Let us speak to your clients as the professionals. Again, at the end of the day, you make the same amount of money, whether we talk to your client or we don't. You guys make the same amount of money. So at least let us get on the phone and let us help you make money. Because again, if you guys don't make money, we don't make money either. And it just doesn't benefit anybody.
So to piggyback off of that,
Piggyback.
There's a lot of new programs. Like we just mentioned, if you got a 720 score, your LLC or corporation has been, and you've been in business more than 2 years, we have the business lines of credit. Even on the mortgage side, there's new programs all the time.
Yeah.
We do so much volume with so many banks, lenders, private lenders. We get new programs all the time.
Yeah.
So
that part.
Get us on the phone with your client. There may be a route that you didn't know about that we didn't even know about a week ago. So we speak to that client directly. We may have a solution for a problem that you may not be able to convey. So, and it's also a learning experience for you, our affiliates. You're an extension of us. So, we want you on the call with us. You'll be CC'd on every email, but also helps you find clients that are qualified, helps you get better deals in,
And yeah, ladies and gentlemen, understand that lenders. What's wrong with you, bro? Again,
Because no, it actually made me think of something. I mean, Joe, you're 100% correct.
I want to hear this.
Yo, what's up with you, bro?
You don't really need the perfect client. You need to know how to tell their story the right way.
Yes.
And we cannot tell the story the right way unless we speak to the client.
And I think also too, like an approval isn't magic, right? It's math. It's documentation
sometimes.
and positioning. Learn it or lose deals.
Now, but how about this, Raymond? Lenders really don't want perfect. You guys are crazy tonight. Ladies and gentlemen, lenders don't want perfect. They want prepared. Be the broker that knows the blueprint. Again, there's guidelines for different. Sometimes it gets confusing. We have 15 different programs. We have business funding. We have personal funding. We even have real estate deals. It's gonna be tough for you guys to conceptualize everything that we do on a daily basis, but we know the guidelines. So again, get us on the phone with the client. Let us explain stuff to them. There's always different ways to pivot. We don't want to decline anybody. We have so many different ways. We're one of the only companies that you can use a cosigner for certain products. Yeah. Usually, if your credit sucks, you're beat, right? We had a business with a guy at a 400 credit score. He was able to use a cosigner and get $125,000 in no doc funding.
Yeah, that's magic. You said it's not magic? That sounds like magic.
Yeah. So again, there's always different ways to pivot. Let us engage with your client. Again, you guys make your percentage no matter whether we talk to them or not. We're hungry to get involved because, again, if you guys don't make money, you guys don't stick around and we don't make money. It makes no sense. Our interests are aligned. We're all here to make money. We're all here on a Thursday night, not with our families, not hanging out, not watching the Dodgers play.
Or March
Because
Madness, man.
yeah, or March Madness.
Sweet 16.
We're all here because we're all here to make money. You know, this is a mastermind that we do every week on Thursdays, right? We're all here for one purpose. It's to make money. Now, I want to also say this. If you guys did not make the money that you wanted to make in the first quarter, if you guys did not start off, if you guys thought you guys were going to make an abundance of amount of money in the change of presidency and you guys didn't, what you need to do is listen more and stop speaking. Listen more. There's gems. Even though we joke around and we're laughing and we're talking, we're all here to make money. We want to learn as well. Let us help you. You guys are going to help us as well. But we're a team. We're a unit, right? We're not.
And remember,
or G Unit.
remember too that we do this on a day to day. We build relationships because of the amount of deals that we do. You're not going to see the same results. You submitting a deal. Unfortunately, you're not going to see the same results. You submitting a deal to a lender if you're doing the MCA, as we would, right? With us, is all about volume.
Relationship
But
volume.
also to relationships. Reason why I wanted to say that is because Joe, I always revert back to the client that you had where he went, and I'm not going to name the bank, but he went directly to his bank. His bank declined him, right? His bank declined him. And you know what? And it was because of, I think, a citizenship issue.
So he's in the process of getting his green card, but he's a very successful general contractor.
Yeah, he was doing what, like 50,000-60,000 a month, daily balances of like $30,000.
Does well, but a lot of banks turned him down. We got him 132K, and we're still funding the guy.
Let's go. And I have to tell you, you know what? A denied deal doesn't mean it's dead. It just means it wasn't packaged right.
Correct.
Because again, there's programs that will accept someone with an I-10. They don't have to have a social. They have an I-10.
What an I-10 is, Daryl?
So an I-10 is pretty much a social for someone that's not a U.S. citizen.
Jose's like, I know this.
Wait, what is it?
Yeah, you good? Just
No,
Jose
I'm
Martinowitz?
You know
Joe
what?
Martinowitz?
Hold on. No, what is an I-10? What does that mean? I'm sorry.
What's up? I don't know. Identification number. That's what I thought. Right? So it's an identification number. You don't have a social, but we need to identify you, right? So again, it just means that the deal wasn't packaged right. There's a bunch of different ways to pivot, right? A decline deal just means that you didn't do your job as the broker because it's the program that he should have fit for. He should have qualified for. You did not take the extra time to do your homework on the file, look at the resources that we have, and fit him with the program you could have qualified for.
100%. I mean, listen, I say this all the time with Daryl. Submitting a weak file is like showing to flip-flops at a job interview. You can't do that. There's no way.
What if I was going to be a lifeguard?
You still,
but also super
wear some
important.
Crocs. You know?
Super important is that you're not getting denied because there's no money. You're getting denied because your file sucks.
It's the presentation, how the file's presented. Like even on the mortgage side, you know, there's files that should close, but you know, if someone presents the file in an incorrect way, you know, they're not crossing their T's, dotting their I's, you might get declined when you should have been approved. That's a reality. I see it all the time.
And ladies and gentlemen, again, listen, we know that we're not the only company that you guys are submitting to. You guys are shopping around just like clients to see who's the best source for you to place your clients. We have a ton of accountants that give us business, a ton of realtors that give us business. We know that we're not the only people that you guys are submitting to. Banks,
other mortgage brokers.
So we need to make sure that we're on top of our game. Again, getting an approval isn't magic. It's math, documentation, and positioning. You either have to learn it or you're just going to keep losing deals. And I'm going to tell you guys something. For the second quarter, we are not losing deals. We're going to ask you for more docs. We're going to ask for more. We're going to ask for more information for what the client needs. Yeah, I need money tomorrow. Yeah, for what? Working capital. Not acceptable. Expansion. Not acceptable. We need to know the ins and outs because we do have 10, 15 different programs. So what am I even submitting you for? I'm not going to submit you for revenue-based financing if you're trying to buy a building.
Correct.
It doesn't make sense. If you need equipment financing, we can't submit you for, we don't want to submit you for a term loan. We have equipment financing that specifically handles the type of equipment that you guys are trying to get. But listen, really quick, we're at 8 p.m. on the East Coast. I don't know where you guys are. I know we have some people in Hawaii. Shout out to you guys. It's 3 p.m. over there and sunny, probably 85 degrees. I don't know why you guys are here with us, but you are, and we thank you. But really quick, I just want to button this up, with some final thoughts. So, Raymond, I know this is your first time on the pod. Hopefully you had a good time. I know you're not drinking tequila, but you got some sparkling water over there. Sapase Abule. Hopefully I said that right.
Nula, 2 tons.
Now, Raymond, really quick, just button it up. What's just some final thoughts you want to leave? The members of Brokers Connection with, as far as the no doc and what we can do to get people improved, or what we can do to make them more money.
Yeah, I would say final thoughts would be, if the files are 680 or better, submit it, and let us look over the deal for you, because we love you and we want to make sure that we get you to listen. If you guys get paid, we get paid, so it's a win-win. And sometimes, you may see a file that you don't know too much about. They may say, hey, I have a 675. Still, if you feel like it's a potential, send it in. So I would say, don't
Underwrite the file.
don't underwrite the file yourself. We're here to help you and assist you and get you where you need to go. There's a lot of money in 0%. Remember, lenders have billions and billions and billions of dollars for credit cards. So they place that aside for your clients so that they can, get the capital they need on that credit card. So they place it every year. They place money for credit cards, business credit cards. So why aren't we tapping into it when it's one of the best products on the market?
Yeah.
A lot of clients are struggling financially sometimes, where they're not making too much money or deposits, so they can't go different routes of, like, getting statement deals and different things of that nature. So let's go no doc. Let's win with it, and let's get them the 0% capital they need to take it to the next level while making money at the same time. So
nice, Raymond. Thank you so much. We appreciate you for coming, Raymond. A lot of insight, a lot of gems that you dropped tonight. Even some that myself, I didn't know. Hopefully, my ISOs that are in here that you guys took a lot from what Raymond said. Took his time out to be here. Sean, anything you want to button it up with? Fresh off of funding today, my brother.
You can go to the diner and get a steak for $15, $20.
Or
you can go to the finest steakhouse in your area. They might charge you $80, $100, right? It's still a piece of meat. You know what I'm saying?
Sure is.
But it's how they present it, how they prepare it,
Yeah,
how they cook it, right? It's all the same thing, but it's just done with a little bit more care, a little more attention, a little more detail, and that's what's really going to get your deals across the finish line.
Nice. Wow. Jose?
Listen,
that's a hard act to follow up,
I just like to be very blunt.
Yep.
Right? You're not getting denied because there's no money. You're getting denied because the file is not good, right? Which means that if you're looking for a term loan and you have a 500 credit score, because we see that all the time, which is it's amazing. It still amazes me till this day. A client can have a 500 credit score, but they want monthly payments.
Insane.
A 500 credit score means that you're not paying your creditors, you're not paying your bills, you're not paying this person, you're not paying that person, but you want what someone with a 680 score is going to get approved for. I mean, let's be realistic. And these guys tell me all the time, yo, you're too blunt, you're harsh. No, I just want to set realistic expectations. I don't want the client to waste his or her time giving me documents at the end of the day I know don't qualify for. You understand? I don't want to mislead them. So for their benefit, what do? Just tell them the truth. Tell them the truth and be done with it, meaning that tell them the truth and give them a roadmap of how to fix it. Right? If the credit score is low, credit repair.
Yeah.
But those are my final words. Once again, like I said before, you're not getting denied because there's no money. You're getting denied because your file is no good. Okay?
Joe?
My final thought.
Fresh off a closing?
fresh off a closing, I'm blessed, I'm happy. But seriously though, I think the best way for all of you to learn, all our affiliates, like let us speak to the client. We want you on a three-way call. We'll CC you on every email. That is the best way to learn realistically because we will assess it 5 minutes. We know if it's a real deal, if it's business funding, or if it's on the real estate side. We'll immediately, you'll hear us explain to the client why. This is why we can't move forward now. This is what we need you to do. Or, yes, this is a good deal. This is how we're going to structure it. That's the best way for you to learn moving forward. And also, for you to find clients, you could kind of vet them at a certain point. Like if let's say one of my affiliates, we close 2, 3 deals together, beginning to end. You should have a good idea at that point what it takes to close a deal on the mortgage side with me. If you're closing a deal with Daryl, you should know what it takes on the MCA side or business term loan, credit cards. So let us work with you. Let us close deals with you. We want you to learn because the more you know, the more money you're gonna make, the more money everyone makes. And like, listen, that deal I closed yesterday, I'm doing 2 other deals with that client. His business partner sent me another 2 deals.
Nice.
His realtor now wants to do business with me. Like no lie, from that one deal, it could be 10 deals. I close those 10 deals, could be 100 deals. It's a avalanche. It's a snowball effect. So the more you learn, the more you know, the more deals you close, and
Good. The
you're
more you know.
you're an
more you know.
extension of us. So you work with us. You're a real estate expert. You're a business funding expert. So
And ladies and gentlemen, I'm going to button this up. This episode, I think this episode was, great. I just want to again congratulate my guy Joe. Congratulate my guy.
Forget about Sean.
Congratulate my guy Sean on getting their deals closed the last 2 days. Shout out to Raymond, our 0% expert, that taught us a lot of what we know, and he's one of the reasons why we're able to go ahead and provide you, ladies and gentlemen, with the no doc programs that we have today. But again, really quick, approvals are strategy. Know the game, play the game, win the game. Lenders don't want perfect; they want prepared. Be the broker that knows the blueprint. Be the broker that knows if your lender accepts people with ITIN numbers. Be the broker that knows if your lender is going to accept people with negative days. Be the broker that knows whether your client can qualify for a particular program because of a credit score. Ask if they're showing profit on the tax returns. Ask if, even if they want business lending, ask if they own real estate or property. Always be able to pivot because, again, we have these programs for a reason. And if they don't qualify for any of that, final ditch effort. Ask them if they have personal income. Because, again, most of the people that you guys speak to, are W-2 employees. We might be able to get them a personal loan, personal funding, even personal cards. We're always able to pivot. We don't want to deny anyone. We always want to be able to pivot to another product, and that's what differentiates us and our members of Brokers Connection. You guys have the tools to go ahead and get these deals done. Now, really quick, if you didn't hit your goals for the first quarter, right? We all know the holidays were crazy and they were strenuous for everyone, right? Everyone had to make the most amount of money that they can throughout the holidays while family and everybody's there to try to make the most amount of money they can to get Christmas gifts and everything. If you weren't able to afford the Christmas gift for your favorite someone, if Valentine's Day was rough for you, if you had a New Year's resolution and you're already not going to the gym, whatever your goals were that you guys did not achieve for the first quarter, the second quarter starts on Tuesday. Use this weekend, retool, look up the programs that we have, understand what we're able to do, the opportunity with the programs that we're able to go ahead and allow you guys to maximize your community. Again, you guys are our community, but you guys all have your own community. You all have your own friends, family. You guys go out to restaurants every week. You guys have your coworkers. They have no idea what you're doing to generate passive income. They have no idea. Speak to them. If you guys want to hit your goals for the second quarter, take some of what you guys learned tonight. Hopefully, you guys wrote something down. But if you guys didn't, please join the community. It's $49 a month. You guys are going to get exclusive access to our programs that we host on Tuesdays and Wednesdays, as well as Saturdays. Show up to a live dive. Ask Jose a question about a deal that you guys have during the week.
Wait, quick. So we're giving, we're speaking, giving out knowledge Tuesday, Wednesday, Thursday, and Saturday. Is that what you said?
No. We replaced Saturday with Tuesday.
Okay, so
Okay.
Tuesday, Wednesday, Thursday.
The reason why is because it's getting nice outside, so and no one really.
New guys are not going to show up on Saturdays. And you know what? I'm so glad you guys did that because, listen, it's
reality.
a lot of you guys are on the West Coast. No one's going to be right next to the Pacific Ocean hanging out with Jose on a Saturday morning, right?
I wouldn't even do it.
So, but ladies and gentlemen, listen, join the community. You guys get a CRM. You guys get 1,000 free leads a month, and you guys have access to us. You guys have access to live underwriting. If you guys have a scenario that you guys need, again, not this segment this evening is all it's only an hour. You guys need something done on a Tuesday. You guys need something done on a Wednesday. Tune in. You guys can ask any questions that you guys want. The intricate details to get into the deals that you guys need to go ahead and make passive income. I mean, listen, think about it. If you guys close 1 or 2 deals a month, you guys can make an extra 5 or 10 grand a month passive income. 10 grand a month, 12 months a year. I don't need to tell you what you're gonna make. That's 4 times the annual salary of what the average person in America makes. So again, ladies and gentlemen, thank you so much for tuning in. I didn't mean to get to go deep dive into the button up, but again, if you guys didn't hit your goal for the first quarter, let's make the second quarter the best quarter of the year. Again, thank you guys for tuning in.
Thank you, everyone.
I'm your host, Darren Mills, El Mágico, my boy Jose Martinez. We got Sean McClellan. We got Joe Durant, fresh off of Morgan's closing.
Tuesday.
And we got Raymond, a.k.a. Say Less, that tuned in this evening. Thank you guys so much. Again, tune in Tuesday for another deep dive of how we're going to make you guys successful. And again, the road to 10,000 starts Tuesday. Take care.
All right. We still live. We still live.
Don't be taking my hooks, bro.
Don't be taking them hooks and them crosses. Don't be crossing the bosses.